Hello, 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 everyone. Good morning. Happy non-farm payrolls Friday. Markets got hit pretty hard on the huge non-farm payrolls beat. If you looked at the headline of this, until it gets revised lower next month. Actually, the last couple were slightly revised higher, but this one I bet will be revised lower. How is everyone doing? Good morning, Sterling. Where's all the news, Sterling? Sterling, where is the news? Good morning, Anissa. Good morning, Jacob. Good morning. Happy Jobs Friday. Yep, it's Happy Jobs Friday. Good morning, PMG. Good morning, Alan. Thank you, everyone, for tuning in. Thank you, people in the background. So, non-farm payrolls coming in much higher, almost a beat, double beat. Unemployment rate as projected. Hourly earnings coming in less, so that was a miss. Participation rate coming in slightly lower, but I think that was a steady to previous. Yeah, hours worked coming in. I saw something. See, sometimes these forecasts are slightly wrong. It's coming in a slight about at consensus. Uh, what else do we have? We That's about it. We got Waller coming up next, but this was just a huge beat. I bet you again. I bet you gets revised lower next month by. I bet you it's 100K revised lower. Also, if you look at the subcomponents, full-time employment lost 22K in jobs. Part-time employment was up what 100. Do you have that? I'm betting an idiot on X. Jim Iorio tweet. I'm betting an idiot on X on a Jim Iorio tweet. What are you betting? Hey, options 22. News coming. Well, thank you. What was the I saw earlier? Do you have those numbers in front of you, Sterling? The where was it? Unemployment, the part-time versus full-time. Boy, it scrolled by here. Now I can't find it. If you can find, oh, here we go. Full-time workers minus 22K, part-time workers plus 151K. Another. Oh boy, the robust economy. Isn't Biden going to speak in a couple hours about how great everything is? Oh boy, the greatest bond bear market of all time, peak to trough loss in 30-year Treasury hits 50%. Yeah, but bonds are safe, remember. Bonds are safe. Safety in bonds. Not always. Not always. So thank you for putting in the news. I was just teasing you, by the way, Sterling. If you're too busy to put in stuff, then everything you do for this channel is very helpful. So, all right. Heat map this morning has switched to blood red. Well, you got Lilly. Energy still pulling back. Exxon getting the crap kicked out of it. So groups, let's do a refresh at this. So everything negative at this point. Everything negative. Nowhere to hide yet this morning. Fed Watch, I got to do a refresh of this because it's been changing and it's now after 8 again. Let's see probabilities. So December is creeping up close to 40%. We're getting to close to 40% for December. And it's back to no cut until July. So they're starting to creep it up for December. Fear and greed still in extreme fear. All right, let's go through the. Oh, see, I had natty gas. I was going to comment. The natty gas broke out yesterday, came up to the next key level. So, natty gas key support. Watch for any pullback now in natty gas because this could be a really nice potential pattern for building a solid base. It's got to hold this $3 on a pullback though. Now let's get to the markets. Well, that was a market. So, real quick. Yesterday was interesting because I watched it the 62.5 for the closing basis, pulling down there yesterday, no close, and then moving up. Now, with the pullback today in the S&P, even with this little dip yesterday, this qualifies for a double in the S&P now. Okay? It qualifies. The NASDAQ one that never triggered was invalidated. But this one against the rotation zone, so always remember against especially the daily rotation zone, the probabilities drop by a few percentage points because it doesn't necessarily have to get to all the targets. So That's what we'll be watching for. Also, daily cycles have gotten back to the top. All right, but we've now bounced down. We got below the 75.5, so we do have a potential setup there. Hey, Chris, outside of looking at the patterns, what else could we look at? We'll help us determine when there's a I think you were doing like either that's autocorrect. I don't know what a vitamin for something like the SPY. What, just re-clarify. So that's what I'm watching here intraday, because again, a bunch of people aren't going to believe this. Let's see if it bounces back. But overall, the key level it's really got to get back above is about 42.78 to 42.82. That's the major resistance area on any bounce. The minor is about 42.70. If it rolls back down, still I'm sticking with the same first targets from the pausing bar from the last swing. I'm not going to bother with reverse harmonics because that's going to be really tight. If you were going to do it, it would be from this little high back to here. And it's probably just going to give us a cluster. There, I did it anyways. Yep, a cluster right there. So minor level would be 42.26.75. Major is this 42.18, 50, 42.18. If it breaks below the Wednesday lows, that's exactly where you can look for clusters. All right, but I'll be watching on any bounce into the open, some of these prior harmonics. NASDAQ. Now the NASDAQ, if you're doing the front run, yesterday did not close below 62.5 on any time. I don't look at 5 minutes, but yesterday did not. You see even the 15-minute. Now today did, and I was asked also if I was trying to do a front run, how do I, and wait for a close, what kind of other stop do I do? I haven't talked about this in a while. I use a 75%. If it trades below, before you get the close on the 62.5, that's considered an invalidation for me. All right? Also, you see on the NASDAQ, it's clearly a triple bottom now. So the double is wiped out that never triggered. So that's where that sits. That's exactly if I tried the front run. So if you do the front run, remember it's a front run. It does not mean the double has to trigger. So you can and generally if that front run gets stopped out, it will invalidate the double and become a triple. But remember, we did not have a double on the S&P. So now that's turned into a double. All right. The key area on the NASDAQ is right about 14,820 as key resistance. In front of that, 14,744, and then we're at about 14,866, then about 14,912. I was fighting with or battling with what were you battling about though? I need to know what the battle royale was. Let's see. I'm using a voice text. Yeah, that's what I figured. What else can you look at around the market to figure out where when we've hit a bottom in the spiders? You mean a long-term bottom? Oh yeah, a long-term bottom. Well, I watch for improving overall breadth in the market as well with patterns. So I watch for improving breadth and generally hitting key levels and forming, again, I can't strip patterns out of it because sometimes you can form V formations, especially if the Fed starts cutting. Although, you know, you can get that V formation, but I start looking at overall on a weekly basis, advancers versus decliners improving, where you're getting more stocks starting to advance than decline. Even if the broad market continues to go down or flat, I watch for the breadth to start coming in. So it starts showing that there's more there's more interest. I start watching for things to also get above. I'll start tracking the and you can find a lot of scans on this. You can just use this 20 simple. Start watching for more and more stocks to start closing back above their 20 moving average. And the scans are done on the simple, which is fine because you're not trying to use a concept like a rotation zone. You're just watching for overall firming. For the Dow, you do have a mini double here. Remember, these are against the rotation zone. But that's what we'll be watching next week. That's it. And for the next levels lower, you could do reverse harmonics, but the forward harmonics is 32,883 and 32,745. Russell. Again, these are sloppy because it's tilted to the right-hand side. I'm still going to look at them based off of where some of these are. But it's, again, they're all lower probability going into next week. 1753. If you're looking for key levels for the Russell, this is where I'd use the harmonics, and I'd start looking at about 1732, then about 1737, then 1741. The VIX, after pulling back down, sort of rising up, see, it's already starting to fade in the open, but again, we'll start to see, we're going to really see, pay attention to breadth on the open with the tick. But still the key level is this $18 mark in the VIX. DAX, no bottom pad. Watch for the DAX if it gets weaker into the European close for it to form a potential double. Otherwise, still your key resistance is about 15.3. Notes coming down. This is not the yield. This is the notes, the contract, and forming a potential double. So we'll see about that. See, the market's already starting not to believe the thing, but where I'm going to have to get confirmation into the open. The yield eking out a slightly higher top. Wow. But this is a double top. Again, these are also against the rotation zone. So keep that in mind. If they do trigger, it could get down without getting to all the targets and rotate back up. The 10-2s still on the bear steepening. Continues the bear steepening. We've talked about that enough. Dollar spiked on that report and now dropping back down. I'm still watching this 106 key support area. Did this spike high enough to make a double? No, it did not. No double, no potential double. In that crude continues this pullback back to now major support. This really got smacked a lot harder than I thought. But, see, I mean, going to be watching with cycles at the bottom next week, going into a bottom pattern for a bounce against the rotation zone. Then I'll be watching for a pullback and then seeing if it forms a stronger bottoming pattern. I already went through natty gas, which could be if you are energy trader, I'd put natty gas on your radar for potential long setups now. It's built a very solid base. So any pullbacks, again, I'm watching that $3 area. Gold, I'm watching now, watching for a bounce going into next week. Still, and then a probable another rollover, possibly to the 87.5. Gold does not have a strong bottom pattern. It would be a bounce and then a potential another rollover. The 10 years still climbing, stalling out at this 80 basis points on the yen, the JGBs, and the yen still trying to rotate back up. But there's no great pattern there yet either. The euro not yet in double bottom territory. So, going to pay attention to that the rest of today. The pound, not either. So, need to sit on, from my perspective, sitting on some hands for some of these markets. Now, let's take a look at the spiders and the Qs. Spiders, this is still, because of the pattern on the spiders, it's getting a little long on the right-hand side, but the spiders can still be a double. It's getting a little, I should say, extended on the right-hand side, not long, to avoid any confusion. But the levels are still the same. The key level you'll be watching on the spiders is 425 on any rally. That would be the first key area. Minor area would be about 423, trading 422.10 pre-market. Let's just put in the little down areas in case it does sell lower. First would be key support coming in about 421.50, then the low at 420, then 418.75 area, then 417.25 area. All right. So that's everything I'm watching for the spiders and the Qs. The Qs is now just a mess with this pattern. This is too close to a mess. I'm pulling the double off because it's been invalidated on the futures. 355 is the first level of key support. Then you have major support about 353.40 and then 351.48. To the upside, we're looking at 355.80, roughly an open. Key resistance about 357.95 to 358, and then 359.80. What else do we have? Tesla. Let's see if the mega caps do bounce back, but Tesla. And I can't get considered bearish again until we start dropping below 245, trading 253. On any bounce bullish back play would be to yesterday's low at 256.25 and then the close at 260.05. Nvidia, does this qualify for, I did not look at this earlier, but it looks like, yeah, we've qualified for a little mini potential double top, a very mini one. But that needs at least a 4-hour close below 432.46, 424.19, 420.05, 415.92. You're welcome, Chris. Oh, it was about politics? Hey, Christoph. Good morning. Following advice to trail TVM short long treasuries rather than, okay. And remember, you can use a target to also trail. You can move up your stops at targets. Remember that. That's where we sit there. Let's just check in on a couple other mega caps. Apple, in the short term, seeing how it's reacting to this channel, but the really key breakdown is 171, still trading 174. Microsoft, just bumping this level down a hair to this key close from Wednesday, 313.40 area for the breakdown. Meta, Meta just keeps getting buying pressure. Nothing's been invalidated with the double yet after hitting the first target. So it's another gap down today, but we'll see. You can really see the power of that 87.5 harmonics on the retracement in ES if you draw them from Wednesday's high low to the morning's high. These harmonics work great. Start studying them. That's why I teach them. Start studying. I've only given some of the ways I use them out here because otherwise we'd be here for way too long. But if you start studying, you'll start seeing a lot of patterns forming. All right, what is there anything else? We haven't peeked at. What did I type? Google. I'm going to watch, even though it's going to be a lower probability one, if Google can get up to this 136.18 over the next, especially in the next week or so. If it can climb up there, it's a lower probability double because of this extended one, this extended sideways. The only interesting thing is the base of it is corresponding to a key support level. So if this does trigger, it would also potentially break support. You can see the base right there. That's the support I'd be looking at, about 127.30. So if it did trigger and it's not in that territory yet, but you could see then how it also closed below key support. And the next level, even though it's not officially yet, would probably, the final target would probably get close to this 117.50 area. So that could be an interesting setup, at least if you're long Google. that could be a very good way for a longer term stop if that does close below that base from Tuesday to 26th. But that's more so how I look at stuff. Is there anything else? I don't know. What else? There's nothing else to look at. Let's just peek back at the S&P going into the open. See, we're already getting the bounce back through this key resistance formed yesterday. It was support becoming resistance and already through it. So it looks like we're going to get the old, I'm not believing the unemployment numbers. Let's bounce back. But I need confirming tick before I can get too bullish into the open. All right. Car has a nice triggered daily double top. Then we'll call it a day. Has it triggered? Yeah, looks like it has. Sterling waiting for the weekly. Yeah, and the weekly is not triggered, and that's a smart move, waiting because it's a see with the rotation zone. That's a smart play to wait for that weekly. Because this has not been invalidated yet. So it's very nice. Very nice. So I hope you're carrier global core. So I hope you're learning to apply these more and more, Sterling. Again, he's learned stuff straight from this channel and making it his own. Very good. That's what I want traders to do, is if you see something that interests you, research it and make it your own, and make it your own the way you trade and your time frames and your risk tolerance and the way you manage it. You got every successful trader eventually makes it their own. They can take key things, and I've talked about this before, key things from other instructors, key things from other traders, and they roll it into and make it their own. That's why you have to come up with your own trading plan. Nobody's going to trade exactly like me, or nobody's going to trade like Sterling or Bob or Options 22. Everybody's got to make it their own, and then you're on a very strong road to success. With that, everybody have a wonderful weekend, and I will see you back. Oh, is Monday a holiday? I forgot. Is Monday a holiday or not? I don't even remember. What's next week? You got Fed speak, but is Monday an official market holiday? Can somebody put this in? I've completely forgot about Monday. I know it's a holiday, but is it a market holiday? I'll have to look that up. I don't know. We'll see. We'll see if I'm here Monday. If the markets are fine, what is it? Then I will be here Monday. If not, then I won't. Let me just check before I let everybody go. NYSE holidays. I just completely forgot about that. Let's see. I don't care about your cookie content. So no, it's not a market holiday. It's just a holiday. All right, so I will be here. So there we go. They are open. Thank you. Thank you, Sterling. All right, I will be here. It's a holiday for those of us who are Italian. Patriots Day next week. So I will be here. Markets are open. Everything's regular trading hours. I just didn't bother to check. Sometimes, in my old age, I forget things like this. So I will see everybody Monday morning. Bye for now.